Welcome to the DH coverage on Union Budget 2020. There are a lot of expectations from this year's budget, especially on the personal tax front, which impacts the middle class and the common man of this country. So to discuss the possible tweaks, we have with us Ravi Jain, partner PwC India for direct taxes. Thanks Ravi for joining us.
Thank you.
There has been a lot of talk about the rationalization of the tax slabs. What is your opinion about that?
Yeah, so rationalization of slab is certainly a top thing in the mind of the individuals, especially after the finance minister last year has rationalized the corporate tax rate, and that was really a bold move. So that was done with an expectation that that will bring more economic activities and investments into India. But at the same time, that raised the expectation of individuals. We all know currently that the income slabs up to 2.5 lakh is exempt from tax, 2.5 to 5 lakh is taxed at a rate of 5%, and then there is a steep rise of 20% on income above 5 lakh up to 10 lakhs, and then above 10 lakhs it is 30%. So there is a strong need for rationalizing this. I don't know, with the kind of tax collection and also the economic downturn we are facing, how much legroom will the finance minister have to carry out this move. But I think now is a time when mere balancing act may not work, and some bold moves like this, which might be expensive in the short term, in the sense that it can cost the exchequer some amount, but in the long run, because it will give some money in the pockets of the individual, will certainly go a long way to bring back the economy on the track.
How will it impact the disposable income of the working class?
Right. So I talked about rationalizing the tax rates at the income levels which are for mid and not very high income earners. So currently the mid-wage earners, they are paying taxes above 10 lakhs at the rate of 30%. So 10 to 20 lakh, if it is taxed at 20%, there is a 10% reduction. And that will bring some saving in terms of money in the, like for the masses, for the middle class. And that will help, that will increase consumption. And of course, that will then, of course, bring the economic activities more.
Surcharge on the super rich tax had led to a lot of capital erosion from Indian markets. Though it was removed from the institutional investors, do you yet again see a tweak in it?
Yeah, but surcharge was something which was aimed at a higher income category. And if you looked at it closely, the surcharge rate of 37% applied to those earning more than 5 crores. So there we are going, I mean, the finance minister is going basis the as the ability to pay, and that's why tax them more. But at the same time, at the mid-income group, the idea is that if we can reduce tax and bring them more, make them more participative in the economic activities. So I don't see that this surcharge, since specifically this was levied last year itself, will be tinkered. But I do hope that the tax rates are rationalized for at least the middle income category group.
Any other changes, especially on the long-term capital gains tax and the securities transaction tax, that are likely in the budget?
Yeah, so that is something. So since the time long-term capital gain on listed securities have been brought to tax, there has been a clamor around that. And if you actually look at the rate differential, it's just 5%, because the long-term securities are taxed at 10%, whereas the short-term is taxed at 15%. So it's not, the 5% is not enough a kind of incentive for somebody to hold for a longer period. So we do expect that some, given the economic situation we are in, so some tinkering there in terms of maybe taking away this long-term capital gain tax itself can certainly help. At the same time, as you mentioned, STT also, so that's also a valid point, because you can't have STT at the same time long-term capital gain tax as well, because STT anyways is on the entire transaction, both side a tax is collected.
Is LTCG and the STT actually leading to the double taxation?
So it's not exactly a double taxation because STT, the rate is very low and it's a tax on transaction and not on gain, because the capital gain tax is only on the gain amount, whereas the STT is on the entire transaction value. So to that extent, it's not fully a double taxation, but yes, to some extent it is. And specifically when we have brought in long-term capital gain tax, then I think that there is a good case that finance ministers should relook at STT.
How optimistic are you about this year's budget for the common man on a scale of 1 to 5?
I think given the current scenario now, and also if you look at, in fact, ATC exemption limit, the most popular one, which is 1.5 lakh and which was last tinkered only in 2014, which is some 5 years back. And that is kind of exhausted too quickly by your PF, by your education, tuition fees of your children, etc. And you are not left with much avenue to create your investment. So common man must also be looking at whether this limit if could be increased from 1.5 lakh to 2.5 lakh. On a scale of 0 to 5, I think I would rate it at 3. There is a good chance because given that the corporate tax rates were rationalized, I think there is a good case of personal taxes and exemptions relating to personal taxes being rationalized this year.
Thank you for joining us, Ravi.
Thank you. Thank you so much.
For more on the budget coverage, log on to deccanherald.com.